Goes. Okay, let's see here if we're live. Oh my gosh, it's working. Perfect. Okay, Wes, give me 1 second. I'm just going to do a quick mic check.
Mm-hmm.
We're live. Okay, we're good. Um,
Good stuff.
oh, it's buffering a little. Let it stabilize, and then we'll kick this show off.
Okay.
Okay, I think it's stabilized. All right, ladies and gentlemen, for those tuning in right now, what you are seeing is the first ever TradingView live stream from the TradingView account in English, global English. If you speak the English language, if you're interested in learning the English language, welcome aboard. Traders, investors, anyone in between, anyone with any interest in markets is invited to this show to talk about your favorite trades, best investments, or any questions you have about financial markets in general. On this first show is the one and only Norok. I've been at TradingView now for almost 4 years, and I've noticed Norok's ideas throughout that entire time. If you're not following him on TradingView, I highly recommend that you do so. Very crystal clear ideas. Great writer. Does some Pine script. Easy to understand charts. And he also uses TradingView live streams. With that being said, what you are seeing is Norok's layout, actually, which is actually quite fun because we can see how he examines charts and looks at TradingView. And Norok, why don't you just kick us off with, we'll get into the details about who you are and your background, but, why even waste any time on that right away? Let's just dive into what you are watching at this very moment. I'm very curious.
So what I'm looking at right here is the S&P 500 E-mini futures, and I'm on the 5-minute chart, and this is my layout. And so this is, and during the day trading time in the mornings of the U.S. Open, this is what I'll be looking at, and I'll be flipping back and forth between this and the NASDAQ, which look very, very similar in a lot of ways. They are both equities, but they have their own little personalities. Today, I actually made a post. I think I told you about this on my ideas, where there's a very clear pattern that I see setting up right now with the NASDAQ in particular. We had the August high that we came up to, August the 15th, or perhaps it was the 16th. And then we came down to this October the 13th CPI print news, which spiked down and then got us back up into the range. That's big. And we've come to the 50% level of this whole move. We held it on November 15th, came off of it, and then I'm looking at this as a potential classic double top. But even more importantly, I noticed on the 1-minute chart today, we also have a yum pattern setting up.
Love this pattern, by the way.
So, you have a little high here, a high here. You have that neckline, which most people identify. But there's one subtle nuance. It's the little tongue sticking out of the pattern. So that was what I noticed today. But that's what I'm looking at today.
Go back to the yum pattern really quick.
Sure, it's a classic pattern. I don't know if it's any books, but I'll probably write one about it. So
I was going to ask you that about the yum pattern. The yum pattern is clearly it's bearish, right? Because of the double top price action.
it's absolutely bearish because everyone's bullish, and it's just going to be like, ha ha ha. You all thought the market was going up, didn't you?
Right. So it's kind of like if you are trying to buy the yum pattern and then you look back on it and see this pattern, it's really oh wow, that double sucks because now it's also not only did I lose money on the trade or have a bad trade, it's also kind of laughing at me.
Yes, it's definitely laughing at you. So because it's taking your money.
The yum pattern, first time I've seen it. I don't know if anyone's ever tried to. Actually, what would be amazing is to try to make a Pine script that automatically detects yum patterns. I don't know if you ever saw that someone made the McDonald's pattern where it detects the golden arches for crypto.
Oh, well, I mean, you could see it here. Yeah.
Exactly.
Yeah.
So I love that's what you're watching. And actually, before we even started this live stream, you and I were talking just about trading. And one thing that I thought was so interesting to hear was your strategy for trading in the morning only. Walk us through that, because I think a lot of traders struggle with that. I think the majority of people are watching markets 24/7. I'm sure they have a strategy or a system, but don't necessarily have like a hourly trading zone that they are trading in. What hours of the day? I'd love to hear, because I just think it's so smart to think like that. Like, this is my window for trading. I'm going to stick to that. Tell us about that.
Yes, absolutely. And I want to share that with people, and that's one of the reasons I do my teaching or and things like that. I don't charge, I don't do classes or anything like that. I just like to do things on TradingView because I had a good mentor, and I like to try to share that. And he told me many years ago. Now, that's not saying I listened to it immediately, but the best time to trade anything, for that matter, is really between the hours of, well, he would say 10 a.m. to 11:30. But this year in particular, with so many critical news events coming out at about 8:30 a.m. Eastern time, right around those news events. I mean, you can see it here. This morning, this was the news we had come out today was yesterday. It was the ADP payroll, and then you had Jerome Powell talking. This morning at 8:30, let me pull it up. What do we have? It's really,
Yeah,
we
you
had
could.
Thursday today. We had 8:30. That's price index, the PCE price index. So yeah, more inflation data, and so that's been moving the market bigly for this year. And so you really need to be around for that. So I get up for that time, but as I was telling you earlier, I'm kind of a night owl, and that's why I would love to maybe live in California or the Pacific Northwest, but I can't, because even though those are beautiful countries, I can't wake up that early because I'm up, like I told you, programming in PineScript or something like that at about 2 a.m. So that's when I do that kind of work. But I'm not trading at that time, and that's not to say that I haven't in the past. I cut my teeth on forex trading over a decade ago. I traded crypto all the way back to 2011, 12, and I have been in a 1 minute, 5 minute chart at 3 a.m. And I'll tell you something, no money is to be made doing that. I
That's
learned the, I
actually.
mean,
We got to talk about that for a second.
what's
That
up?
is actually very interesting. Is no, if you're trading at 1 to 3 a.m. I mean,
Maybe somebody can do
yeah,
it, but I never met one. I'm sure people could say in like the comments or something like that, oh, I do it. I'm like, okay, cool story, bro. I mean, good luck. I'm really happy that you can, but I learned that that is not a recipe, because if you're up looking at a chart at 3 or 4 a.m. and you're a normal like scheduled person, that means that you had a stop loss, but you decided not to take it, and you're just sitting there waiting for it to come back to maybe break even so you can have less of a loss. And it's not, because you're obviously on the wrong side of things, and you can't go to bed because you know that you got this trade on, and you're not going to make any good decisions. And so just nothing good comes of it.
yeah, that it's such a simple lesson, but it's probably pretty timeless. Which is, well, that takes us back even to the start of that question, which is sort of knowing, the hours you want to trade in. What exactly are your hours? Because even though, yeah, I think where you're based in the country, the market opens at 8:30 or so, and
Mhm.
I think you were telling me you have until lunch basically, and then you try to back off a little.
Well, I'm East Coast,
Yep.
and so yeah, when the market opens, is 9:30 a.m. But like I said, I try to be up at about 8. I wish I could get up earlier, but like I said, I'm a night owl. And then I want to be there definitely in the open, 100%. If there's news, I want to be there at 8:30, because there you're going to get those big move events. And I don't necessarily jump in on news, but I rely on these events to set up chart patterns. What we had this morning was really key with I'll bring up the S&P 500 right now. So you had the 9:30. Let's go down to the 1 minute. Today was not really a great example for that opening volatility. I wish I had thought back and cut a couple of examples. I got one for Tuesday I want to show you. But basically right here at 9:30, you'll typically get some kind of little volatile event, which in a lot of cases can set up for a trade. And in this case right here, one of the things I use is I call it a spike indicator. And so often, and this is so valuable for people to see, is when you have a price shock in one direction and then that candlestick comes back up and closes within that range. I use a 9 period median. Actually, it's the Tinkinson from Ichimoku, but that really kind of defines it for me. When something breaches a low, like that level right there, and then closes back above it, you just got to go long off that, because basically a bunch of people got into it, got either stopped out, or all your bears are taking their stop losses and they're panicking, and that's going to get you a big run. And you had that exact same thing happen at 10 on the news event, which was ISI in manufacturing, PMI, which is another inflation thing that is above my pay grade. But same thing, you have it to the top side where you breach this high, and right after it does that stop out, that shake out, that spike, you just get a trend in the other direction. And man, people just need to be aware of that. And so you've got a news event at 8:30, you've got the open doing one of these, volatile boop, boop, and then you have at 10 o'clock. And this is all just today. And this happens a lot. A lot. And this is what I trade on. And I look for these. And if you want me to, I can go into like how I use TradingView to identify that. Would that be?
Yeah. Before we do that, actually,
Oh, yeah. Ask questions. Ask questions.
yeah, because the thing I'm just fascinated by is like having that, time, that set time that you're trading in.
Oh, yeah.
I talk to a lot of traders, even just reflecting on the way I've traded in the past. I'm no expert trader by any means, but I've always been fascinated by people who are really sort of disciplined in the hours that they want to trade in. So you have your start time, like you're like this. I love the 9:30 open. That's what I wait for. And then do you have an end time as well, or are you willing to sort of watch and trade throughout the whole day?
Well, I'll leave a trade on through the afternoon, but there's a real critical time. Again, this comes from my mentor telling me about it. There's a really, really critical time at 11:30 Eastern. That is when Europe and London go offline.
Interesting.
And so throughout you have like the U.S. Open at 9:30. I mean, here's how it was described to me, and I'll explain how it was taught to me. So from 9:30 till 10, you've got a lot of these overnight orders triggering. You got a lot of people rushing to get in and out. You got a lot of craziness. Okay, so you don't necessarily want to trade that open, but I do, because this year there's been a lot of good setups from that. 10 a.m. until 11:30 is really when you should be doing your big work. And right at 10 a.m., I do a scan of stocks, equities, for specific setups once all that noise is gone. Then through that 10 a.m. to 11:30, you have some of your most, I wouldn't say volatility, but the most volume, basically. It's the most real trading that's going on, because you have both the U.S. session and the traders in Europe still overlapping. I don't have it with me, but if you go and look at market data, you'll see that 90-minute window is where the majority of all the day's action really, really, really happens. And so that's the most meaty time of the day to be taking trades. And then at 11:30, Europe goes offline. And not only is that a decrease in the volume going on, but it can also be a very key timing element for trading itself. Let me show you something cool. Give me a second here. So we're looking at Tuesday this week. Tuesday, let's find the open. The open's right here, and pretty much nothing happens. And I'm sitting here just watching. I've got some friends. I got this one friend in particular. He is an excellent scalper. And the reason he's a scalper is because he's a sociopath, but in a good way. He has no emotion. He has no ego. That's not me. I'm very emotional and egotistic, somewhat. Some would say that. But I have to go with rules. And so I sit and wait for my setup, like these high probability things that I look for over the years I've developed. And that's the only time I'll trade unless I'm being naughty, and all traders eventually get naughty.
I agree with that. Yeah, it's true.
Yeah.
It's so true. Unless you're totally automated with some sort of system or machine, of course, every once in a while you're gonna break the rule a little bit. Everyone knows you're not supposed to, but it's human, and it does happen.
Yeah. I try, man. I try, but I also, on that topic real quick before I show this thing cool, philosophically,
Yeah.
there's you're trying to model chaos when you're trading, and you're modeling the emotions of others, because in the price you're seeing people's emotions, fear and greed. And so while you can program certain things, you yourself have to kind of have an intuition about it. And so you have to be mechanical to an extent, but you also have to be intuitive. That's why it's so hard and fascinating to me. So
a
yeah.
lo- there's so much to unpack there, and I'm making a mental note of the aspect of sort of trading chaos. But I did want to confirm something because I think it's, to me, maybe going to be the sort of highlight of our first TradingView show here is going back to that time, because we never got to sort of wrap that part of the conversation up. Is going back to that point in the day where Europe and U.S. markets overlap is just so interesting. And then and then there's a point where, of course, Europe goes offline, and you can imagine there's traders all over Europe who are trading, U.S. markets. There's probably global overlap on many different symbols. So just to wrap that part up, do you sometimes see that when the European close does happen and they're all offline, but U.S. markets are still open, for example? Do you kind of feel like, oh, this isn't as exciting anymore? You don't have to have data for me, but just curious if, observationally, do you see that volume spikes are different? Does it slow down a little? Or the symbols you watch, do they change? Just so curious about that. And someone in the
Yeah.
chat actually just said that's so interesting to hear about the time. So just talk about
I'm
it
gonna
some
show
more,
you.
because it really is. I don't think many people have considered that overlap between various countries and traders in different time zones.
I'm going to show you something really cool here in a
Yeah.
second. It's a gorgeous thing for me, and I'll try to explain it. And I really invite questions, because sometimes I get to just be going, and I also have a lot of years of just making this intuitive. And so I want to try to bring this down to let people understand, because I really think it's very valuable. And it's not something super secret. It's something that once you see it, hopefully you'll be able to see it. So going back to Tuesday here, like I said, I was being very patient through the day. I didn't see any setups in here. This is mostly just noise. Okay. So I don't see what I want to see. But as we're going to use a little forward tool here. Let me slow it down a little bit. And so, minute by minute, I'm trying to get to it without painstaking everyone. One of the things that people, I think, get into is, like, when something gets going, they want to jump into it. And so naturally, if I'm sitting here trading, I'm going to be looking at this trend. I might be second guessing myself, like, oh man, I should have gotten short somewhere in here, but it didn't fit my rules. And that's okay, because I'm waiting, because there's a key event here when Europe goes offline that I'm looking for. I'm looking for something to happen, typically some kind of reversal at that 11:30 timing element. It's very key. I mean, so no matter what happens through the day, I'll sit here all morning just kind of staring at the chart, reading the news, arguing with people online, because people are online are wrong and they need to be told. That's my second job. I do that part time. And so when you get around to the 11:30, you need to be looking, because something very interesting can happen. So as we're coming to 11:20, 21, we're slowly going trailing down, 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 and we're going to start to get into a situation here where we're at right here at 11:30, right here where Europe goes offline. Now, why is this important? Well, I've explained the timing of it is because that's when all the traders of Europe are done. They're going home, and you're getting that lack of liquidity. And so if you think about it philosophically, that's when a trend can really kind of start to show some signs of canceling out. And one of the things that I'll look for first is some kind of a indication that this trend is ending. And what you'll typically get in any situation is you'll see this little up move. And I really kind of measure this based on this time period right here. There's nothing magical about it. It's just a line that I use to keep me honest. And so when it captures this 9-period median again, then I get interested. It's also at 11:30. It's also at 11:30, and there's one additional thing that's happening right here at this level, or it was. I've kind of left out. Let's go up a little bit, and let's go back to where I would have done my research in the morning. Look at the 30-minute here, and if we go back and look, we can see that this was really the launch point for the week prior, right here around 39.44. Let's call it 39.40 on the ES futures. where on Friday, the 18th, which was 3 weeks ago, and also here on Monday and then Tuesday, that's where this recent trend launched. And so we're back down to this level again at a key timing element and after a big trend. And I just have my initial little pullback right here. So what I'm going to do is this. I'm going to say, here's the move that got us here. Okay. My reasonable target is going to be about 50% on that pullback. So I know where my target is. On this little pullback, I'm going to say, okay, my target's right there. I want a 3-to-1. I want a 3-to-1 because that is my minimum criteria for taking a trade. And the best part about it is in this situation is I get to clear that low. I get to clear that low. And if it stops me out, that means that trend is continuing. I'm wrong. I know. And that's it. That's all I need to know. And we have that timing element. It's at a level right at 11:30 when Europe goes offline. And so I'm looking for this thing to hold that level and go up. Now, I had a meeting that day, so I left the my house, went out to a meeting, and occasionally I would check the chart on the TradingView app plug.
Nice, great.
But I'm not going to touch it because it hasn't got to my target yet. And so if I was sitting here watching, it'd be kind of frustrated. But this is why I'm not taking trades in the afternoon hours. I remember right here, it got up and didn't hit my target. But you know what? It's okay. It's okay. I'm doing other things. I'm distracting myself. I'm not watching it. I'm not second guessing myself. Because if I had, then, oh, man, I would have really been a little upset. But honestly, I try to just set a trade, know where my risk is, and let it play out. And then you get something like this. Hold on, I'm not done.
I have so much to say on that. A
Well,
lot to unpack there, but
yeah.
keep going. I'm all
And
ears.
what I also try to do, and in this case I didn't, I went ahead and closed out before the end of the day because it started just kind of hanging around, not pushing above it. And I had things to do that night. I didn't want to watch it. So I closed out about, right before 4 o'clock. But hindsight being what it is, usually what I'll try to do is leave on a contract. And I'm going to let this thing run for just a second because right now I'm going to narrate. We're going through the overnight session, and I don't trade in the overnight session. You can if you want to. But what I find happens, and one of the reasons I don't trade it is especially futures, is because you can have a great trade you put on the day before, and it can look like it's going to do very well before you go to bed. And then you're going to wake up the next morning and you're going to be very sad and frustrated because Europe has knocked it all the way down. We're coming up to midnight right now. It never really got above that high that it made about 1 p.m. yesterday. I don't think it actually broke it. In fact, it held it. And so overnight, it began to sell off on Wednesday. And remember, this is right before, I think there was some news at 8:30. Let me see what it was. So, 8:30, they had the ADP, 8:15, ADP non-farm payrolls, which can be a predecessor of the Friday news coming up. And so needed to be online for that, but I'm fresh. I don't have a contract on. You would have been able to go up a little bit. And then at 8:30, you're going to have the preliminary GDP numbers. You got a lot of news events coming at 8:30, and right here is that 8:15. So let's pause it right here. What you got at 8:15 is you got that spike up to break a bunch of stops, and then it just sells right off. And you come into 8:30, does a little bit the same, and then now we have the open. There's that volatility open, holds a resistance, comes all the way down. Now remember where the entry was yesterday, all the way back here, and the stop was down here. Never quite actually breached it. Now let's go up a little bit. So if you recall, the trade was basically like here. So even though in the morning session we came down, breached there, we never actually broke that low from yesterday. Remember that low we took at 11:30? And then JPal speaks and he rocks the market off that same exact level. And again, there's a lot of things in play here that I want people to be aware of. Is this key lows, easy to see. You also had that 11:30 inversion right here that really launched it on Tuesday, and then it never really threatened your stop. It got close to it, but never really threatened it up until JPal spoke. Let's actually look at that. That had another one of these events where, people get fooled. You have that, that spike down right there when he starts talking,
Mm-hmm.
and, holds the 50%, and then it just goes up for there. So,
That JPOW move too is we're gonna have to talk about that. But to go back a few hours because
yeah,
of, a few things came to my mind that we must
yeah, what do you want to talk
discuss.
about?
Is is the aspect of so going back to that rare window 9:30 to about 11 a.m. You have all these European markets open, all these U.S. markets open. You find your trade and your setup, you place it, and I love the aspect that you set your trade up 3 to 1 as your criteria. You stick to it, you
Mm-hmm.
map it out, just all
Mm-hmm.
right there, visualized. And I love that you then went to a meeting and left your house and the trade's still on because it's still such an underrated skill for people to really grasp that. So many people just place a trade, no criteria. They're on their phone refreshing every 10 seconds or they can't leave their computer. And just the joy of almost here's the trade I want, here's my criteria, press set, and then you're out the door. How long did it take you to learn that? And because it sounds so simple, but for all the traders I talk to, it's still jaw dropping how few have mastered that, even to this day.
Well, my friend, I was just looking it up right here. Hold on. It really one of the best books about trading was written coming up on 100 years ago. Reminiscences of a Stock Operator. You've
Right,
heard
right.
of it?
Yeah, that's
And really,
Edwin Lafleur, I believe,
well, he
right?
was the newspaper article guy that actually, did it. But I mean, it's Jesse Livermore was the trader that he was interviewing about his life, and it's really just this right here. It's where is it? It's sitting tight. I pulled up the wrong quote. Oh yeah. After spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this: it was never my thinking to make big money for me. It was always my sitting tight. And sometimes walking away from the screen with your stop just in place um, is the best thing that you can do.
So agree.
Because here's how I try to explain this to people that maybe have a problem with it. So when you put on this trade, let's say you did this same trade where, you put your stop right here and you took the trade. Some news could have come out, some bomb could have dropped, some hurricane could have come through, and this thing could have just gone right down to your stop, like that. You were cool with that risk when you put the trade on. You had to be. Don't say that you weren't. It shouldn't matter. It shouldn't matter that it stops you out the second after you put it on, or if it stops you out hours later. You still took that same risk. So why are you going to worry about it? And I'll tell you something. Sometimes I do try to, like I said, be naughty and try to overthink things. But I knew like leaving was probably one of the best things to do because of this little event right here. Because like I said, I got a friend. He's a scalper. He's totally emotionless. This would piss me off because when it misses your target by like a pip or something like that. And then it comes all the way back down. What are you doing? You're like, oh no, I don't want to take a loss, blah 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 blah. But this actually happened. I got the alert when I was like driving, listening to a podcast, and I saw it pop up on my screen, and it was just like,
That's right there. That's the mindset. But that takes a while to get to that point where losses and
yeah.
wins aren't so dramatic, right?
Oh, they're
Because
still dramatic, man. No, I'm telling you right now, I'm admitting I am very emotional. I just have rules, and that's what keeps me centered. Like I'm not like there's all that trading advice like trade without emotion, and okay, cool. Like figure out how. Let me know. I have rules. I have this particular setup right here where I look for that trend to come down, recapture the red line, the Tinkinson, set my stop below the prior low, and play it back to the 50%. That's a trade. I do this all the time. Sometimes it works, sometimes it doesn't, but I make more than I lose and I make money. If I take a loss on it, am I going to get pissed off? Yeah, but it's okay. And I take a few breaths and I go for a walk and I come back the next day for other opportunities. I mean, I've never figured out how to remove the emotion. And so what I do is just try to do the same thing all the time and let it play out, because that tends to work more often than not.
Perfect. Absolutely perfect. But of course, kind of the key here too is always easier to say than to actually do. But it does take many
Hmm.
years to get to that point. Dissecting sort of your whole walkthrough, by the way, another question that came up to my mind, and it's a little bit of a tangent, but I think tangents are good in this example. Is when you were, using the bar replay to walk us through the whole life cycle of that trade, even if you did hold overnight, for example. You were briefly talking about pajama traders, and that kind of brought me back to the whole time zone aspect of how we started this conversation. The times that you trade that work best for
Hmm.
you. I'm just so curious. What are your thoughts on pajama traders, overnight futures traders? Do you think there's any real signal there? If let's say you're up coding a Pine script, it's 1 a.m. and you check, futures. Are you saying, that's interesting, like that means something, or is it mostly noise to you, or are you kind of agnostic in terms of the time for the signal of markets? You're open to any time, that markets are trading, and what they're telling you, or are you saying 1 a.m. don't care, I'm going to bed, I'll see what it's like at 8:30 a.m. tomorrow?
Well, broadly, I believe in supporting people in their trading journey. And if someone tells me I prefer to trade in the wee hours because that's what works for me, or I have a strategy that I've developed that works there, then I'm going to be like, hey, man, you do you. But I have tried that over the years and got smacked, and it just doesn't work. It like I'll get alerts, I'll get my spikes that'll happen because it's low liquidity that can happen. But when I see something and it looks really good, I have taken it in the past. I'm like, man, that's a really good setup. I think I'm going to take it. But two things happen. Number one, they just tend to typically lose. Two, now I'm thinking about it and I can't go to sleep. And I've this goes back to the whole pajama trading thing as well. I really believe that whatever trade that you're going to put on at night, that's going to make you lose your sleep is not going to help, because you're not going to wake up refreshed the next day. And that's really been kind of thing. Like sleep is, something that is really important for having a clear brain. On some mornings when I've woken up very, very early, maybe even gone to the gym or something like that, and then I sit down in front of the charts, I'm just so crystal clear because I had good sleep and rest, and I'm able to trade better. And so you're basically, in my opinion, if you're doing it and you're not, and that you don't have a specific setup that's only working for you at night, um, you're basically sacrificing a good trading morning by trading at night. That's how I would say.
And how about the pajama traders in general, though? Do you think there's like, is it interesting to you, or do you just ignore it altogether?
What do you mean? Maybe you need to explain to me what a pajama trader is,
Yes,
because I'm not really.
okay. Oh, you're right. So maybe not a pajama trader in this instance. More of, let's say you see that S&P 500 futures are down 1%, and it's 1 a.m. Is that something where
uh,
you think it's
Yeah, I mean, like
interesting,
I
or you
said,
just sort
it's
of
the
ignore it
biggest thing
altogether?
for us, and I talked about it with
Not from a trading
yeah, a little
aspect,
bit.
just an
you
informational
know,
aspect.
we've had cases in the past, I guess, where people kind of use
Um,
TradingView as like a prototype
you know,
workshop.
honestly, I mean, if
So
something like that were to
we're
come
obviously
across, I'd probably check the news,
in our
and
interest
I'd
to
probably
see
find it
what was happening.
intriguing what was going
So
on. Maybe something
like
interesting
initially
happened.
the scope of what we
But no, I'm
decided
not
to
going to
do
trade it,
kind of had some
because
awareness.
again,
Our
most of the
widgets are an
trading
off-the-shelf product.
around that event
I mean, we can
is
roll that out
probably going
straight
to be
off of
done
the
the next day
futures
during the
instantly,
cash,
basically.
session.
But to build
And
this service, and I don't know
if
if you
it's a
saw,
big
but we
event,
sent
if
emails to
money is
sellers
moving,
everywhere as well.
there's a good chance I'm going to be able to find out
Okay,
how to find a piece of
cool.
that using my strategies. And I keep coming back to this, using my strategies kind of thing, is because that's what I have come to trust. And those it
Yeah,
I really am kind of agnostic to a trade at night. Like, I don't want to say that I would never
yeah,
do
I
it,
definitely feel
if I
that.
saw something, because I'm a
But
trader.
so in
I mean,
terms
I'm going
of
to take
kind of
opportunity.
hopefully
But
it's
I
understandable
also
from
have
your
this
perspective in
kind of
terms of
mental
if we were to
note that
build
the
this
best
pretty shallow
opportunity is
functional
probably going to happen when I have my best success, which is during that morning session between basically 8:30 and noon. And so that's just really become my zone. It's been my zone. And it's almost like a kind of practice sort of thing. That's why I told you I'm not discounting the pajama traders, because if all you do is trade, between 1 a.m. and 3 a.m., you're going to probably get pretty good at trading between 1 a.m. and 3 a.m. It's practice. It is a skill. It's an art and a skill. This is when I practice trading. So I don't want to discount anyone that says that this is what they do. Cool. I find it just better to trade during the morning session. Is that a good explanation
Yeah,
of my thoughts on it?
Yeah, it's perfect, and that's sort of you know, sometimes I sort of see those 3 a.m. moves, or I wake up at 5 or 6 a.m. and markets are crashing, and I'm just never certain to think, well, it's such a small, basket of players who are really trading those hours. How seriously should I consider this type of volatility? Which is actually segue to
Yeah.
the next question, and you had mentioned it earlier in your trade walkthrough. Do you like this type of volatility? Is this better for your trading strategy, or do you prefer more of a trendy market?
This year?
Yeah, this year. Yeah. What's your thoughts
Oh,
on this year?
this year's been great. It's fantastic. I've been actually lamented today that this is the VIX that we're looking at, and VIX for all of this year has been between 20 and 35, and VIX is a measure of volatility, and volatility is change, and change in the market is swings in price. And so let me show you something here. Let's look at this. Let's look at the ES. Let me open up a new chart. Give me a second, because I want to delete all my levels. This is something I tell people, because I've been trading for it's going to be a decade in January. Like, full time is what I dedicate my life to. And so I remember things that a lot of new traders just haven't experienced. And if we look at the S&P 500 futures right now, this is a daily chart, and we look at this bar right here on Thursday, November 10th. I mean, this right here is a 207 point bar. It's a big bar. It's a big bar for now, but if we look at these bars right here, just the bottom to the top, a small bar, that's 47 points. Okay, so small day in this year is just maybe 40 points. Okay, if we go back to what you were talking about, trendy market, specifically the market of 2017, which I was not day trading, because, well, here's the reason. A day on October 2017 was 8 points.
Wow.
That's a big day. This big day right here, this huge down day on November 2017, 5 years ago, from top to bottom, this was only 30 points. The biggest day of 2017, or some of the biggest days of 2017, were smaller than our smallest days this year. And what you need when you're day trading is movement. You just need it to move so that you can catch those moves and make money. And how you chart what that looks like, and how we know if we are not in that level. Hold on, let me clean this up a little bit. Is if you look at the VIX and you go back and look at the VIX, the measure of volatility back in 2017, where it was at its historic low levels below 10. So I love it, because it gives the opportunity for movement. It gives an opportunity for trades as long as we stay above 20. And we have. Now, you can kind of notice the sinusoidal wave nature of volatility. One might say we could be getting some volatility coming up pretty soon. I don't know. But I'm definitely going to be sad, and probably going to have to change my style a little bit if we do start to trend in a nice grindy upward fashion and volatility drops, because you just won't have these kind of opportunities you've had all year. So I'm enjoying this year while it lasts, because I've seen it, and I know eventually we will return to a lower volatility market, and you'll just have to change up what you're trading, what you're doing. So
What
I
would
like what
you
I'm doing now.
what would you tell traders or investors who just don't aren't good at volatility or just weren't prepared for this year? Like, it's such a hard concept sometimes to grasp. This is mostly for new traders and investors.
Yeah,
What would you
it
say to
is.
them to maybe get them maybe prepared for the future, or at least to reflect on 2022 in general
Well,
with some key
yeah, it's
lessons?
basically,
Well, the first thing I want to
if
say
we
is be
don't
a
have
little
any
bit of
tweaks,
a
right,
hole
in
and
the
say
last
get good.
before 100,
I mean,
120K,
this
it gets
is
quite
this
close,
is
but it's really
basically
not as
just
convincing.
it's
If,
practice.
we
It's
do
beating
have
your head against the
evidence
wall,
in terms
finding
of
out what
a
works and what
correction
doesn't.
itself,
And it's not going
that's
to be easy,
awesome.
or else everyone would
And
do
then
it.
I don't need the money.
So you really, I mean, I've had a hard year. Like you can go back to my post and you can see like
Okay.
my high conviction trades from like March where I thought that was the bottom. And yeah, I mean, I'm still, I cut a lot of my Amazon and Google that I was in, but I mean, I got hurt.
Sure.
Everybody hurts this year. It's the, the, what's the song by
No, no,
REM?
no. They're not equating
Everybody
it to
hurts this
like,
year. Trust me.
this is simply
But
to cover our cost. Has
I'm still
nothing to
hitting it,
do with the brand value,
and you
right?
just have to do that. You
Like,
can't quit. So that's what I would say to people trying to get ready. If you're in pain, if you're hurting, if your strategy's not
how
working,
many months
uh,
guaranteed covers our cost?
log your trades.
Um, I really don't know.
Definitely
I mean,
keep a log,
I
even if it's just
definitely,
a little Word
again,
document
the
that
issue being, I
you take a
don't
screenshot
know
in
what the
TradingView. By
extent
the
of
way,
maybe
little
trading
plug.
is supposed
I
to
love the
be
gas
in terms
platform,
of
by the way.
correction
Just right up
counselors.
here, go up
I
here,
don't
either
know
copy
what
chart
the
image, then Control V
estimation would put on a
into your Word
single
document,
two-page
or link to it,
report.
or save it to a folder on your
That's
desktop.
not going to be a
Just
lot
do
of
that.
money for us.
Just do that. You don't have
So,
to write anything, and just create a folder of your trades, and then go back and look at them. And the cool
yeah,
thing
so I
is, if
think
you
the
do that,
total in terms
you're going to look
of
back in a year and
the
you're going to be like,
impression
wow,
rate
I
for
know
all
so
of
much
these
more
symbols
about this chart
is
than I
60
did
million or something
before.
like
I mean,
this.
it's
And
so
feel
valuable.
free
Just
to
take
ask me for
screenshots. Don't.
details. But
It's hard to
we're
log.
starting
I have
from
a
a
hard
list
time
which is
logging.
much smaller. It's only
I
the
do,
S&P
because it means you're
500
going back
Nasdaq
and looking at your
futures
mistakes.
those. So I don't think that's
But
going to
now
be
on to your
sufficiently
specific question, because I tangented
fast
right there.
versus the
Going
TradingView
forward
tools.
in the year, I really think as a base level,
But
you kind of
it's
have
something to figure out
to
for sure. And
ignore
if you
narratives.
can get a
I think
rough
you need
estimate,
to
then
watch less
awesome. I can
news,
definitely tell you
and I
where we
think
need
you
to
need to
come in
focus on your own strategy and how
setting
you're
the
trading.
information perspective. So
Um,
that would
I
be,
think it's just so
which
amusing
is the
to me
equivalent of the
that if you
dollars,
think
meaning
back to
we'll get a
2021,
minimum commitment
the
for a
narrative
number of months,
was,
and we're
even Ray
waiting for
Dalio
it
was out
to
there
trigger
saying it,
something like that.
cash is trash.
Yeah.
And what has been one of the best
All right.
performing asset classes of 2022? The US dollar.
Cash, yep,
Really?
cash.
I mean,
If you had cash, now we're seeing an interesting little thing happen right here on the chart. The dollar's falling off because, well,
sure.
I'll get to why this is going on right now, but um, it was just it's so ironic. And I'm not saying that I knew this ahead of time. I believed it too.
Mm-hmm.
Everyone was like, "Oh, you got to buy Bitcoin. You got to
Yeah.
spend that cash. It's all going to get inflated away." But that's it's just so
Mm-hmm.
amazing to me how wrong everyone can
The
be.
widget
But this
is
is what
smaller
was
than it
popular
is.
for people to have on CNBC and tweet out about. Was how, let me get an alert for my spikes.
Oh, I
Was
love seeing
how
that.
this was, yeah,
Mm-hmm.
how this was. But you see, those were 1 minute spikes, and we're outside of the time, so I'm not going to take them.
Mm-hmm.
So that's what I say. Like, going forward, you're going to hear all this stuff about recession, recession, recession. You're going to hear all this stuff about stuff. Okay, I've been waiting for this recession all year that people told me is coming, and we're just not getting it. Now, some would argue that we are, but it's weird. Okay, and that doesn't mean that there's not opportunities. I mean, for instance, if you're just sitting back and waiting,
Mm-hmm.
you're kind of missing on some opportunities. Like there's individual stocks that are still moving out there. One of the things that's been going on right now is, United Healthcare, Merck. Healthcare is just,
Wow.
Yeah.
okay, no bear market there. So
In terms
I,
of
I what I,
FTC,
what I'm
as far as
challenging
like
here
rating,
is
does
all
that
this
exist
FUD,
in
fear, uncertainty, and doubt, that is very
company, I guess, like in
popular
terms
on
of the amount of
CNBC and
security?
Twitter, because people can share some chart or share some data and say, see, the
Mm-hmm.
world's going to end, and people are like, oh, retweet, retweet, retweet. That doesn't make me any money. Okay, that doesn't show me opportunity. So I would suggest that people just focus on finding opportunity and going into the future.
Okay.
um, Stocks are a lot cheaper now than they
I
were a
got
year
you.
ago.
I got you.
I'll say that. So
It's a lot better YOLOing in now than it would have been this time last year. That's for sure.
And
Don't do that. Hashtag disclaimer.
And you said something too. I think that's so interesting too about the economic events. Everyone's saying recession's coming, crash is coming, right? Do you follow economic indicators, and what's kind of your general opinion of them in general?
Well, I follow economic indicators in that when they come out, they provide me with excellent trading opportunities. I think one of the really key thing that's going on right now, again, going back to the way that I trade, the things I look for. You had back in February of this year. I'll show you my mistake here. I'll be open on mistake. So in February of this year, right here is February the 24th. You know what February the 24th was? Think about it. What happened in February this year? It was really big. Big, crazy event.
Yeah, that's the invasion.
Yeah, you got it. So on the invasion, you had that. Let's bring it back here. So on that invasion, you had this sort of spike down, which broke the low. This is the S&P 500. This is the whole market. Breaks that low, and now you start to rise up against that. Came back and tested it, but never triggered your stop. And you got this rise up here. And I got fooled. Like everybody else. I thought that this was our BTFD moment, and that's when I started trying to load up on some tech. And it's okay. I took my losses and went through the summer, and then we got that same event right here again, October the 13th, which was the CPI print for October. This was that first CPI print. It went from 8.3 to 8.2. You had this little glimmer of hope that inflation was starting to come down. But even if you didn't know that number or know that event, you can sit here on the daily chart and you can see that, look, we had established a low. We came down, tricked everybody out, spiked out, and that's where we had this trend. So, yes, I can know why this happened, but I don't feel like I need to because I can see it on the chart.
Love that. Yeah,
that's my philosophy about that.
Yeah, there's that aspect of sort of people are analyzing news, economic indicators, they're forecasting into the future, they're pulling in all this data, alternative data, past data, whatever it is, or you can just sort of watch price and let price dictate some of that information for you. I think for everyday people, that probably makes more sense because many of us have, other jobs or other, family to tend to or other tasks. We can't be crunching these types of huge economic data sets and modeling them. I mean, we could. It's out there. You can probably do some of it too in something like PineScript as well, or if you're really good at certain data platforms. But you also could just have a really crisp chart. Going back to the start of our conversation, know your times that you want to trade, and really go from there. One thing too that as we near that hour marker of our chat, that I have been looking at though while we've been talking is your watch list on the right. I got to hear about your watch list and what you're looking at. Obviously, not every symbol it looks massive, but it's beautiful though. I can tell you got a lot there. So what's just walk us through your watch list. If there's anything that you're really interested in, or anything on your watch list that you think we should be paying attention to.
Sure. These are ones that I'm going to look at on a regular basis, either because I want to or because my friends want me to. That's really that simple answer. I mean, you got the ES right here. I don't really have SPY on here because, again, ES is going to be trading, 24 hours a day. And so if I do want to see that big move you're talking about, I'm going to see it here. I don't actually look at any after-hours charts, by the way. I don't. I just look at futures.
Wow.
NASDAQ, of course. Dow and Russell, I don't trade these because
actually, hold on, Wes, we should talk about that. So you don't even look at after-hours earnings moves? You're not interested, or only futures?
Have you traded after-hours earnings moves?
I'll say, back when I was first getting started, I did. And let me tell you, I've never made a dime on them because they are just insane to trade. And the action is pretty wild. But if that's why you're asking me, the answer is I don't recommend it. It's a little quick.
Moving on. That's the answer.
Perfect.
It is.
Perfect.
I've never met someone that made money trading earnings. Trading before earnings, 3 weeks before, so you get that volatility push into earnings. that's a different story, but we can say that for another discussion.
That's a whole, when earnings season comes up again in a few months, we
Mhm.
should just plan a whole conversation around that. That's
Oh,
cool.
I'll show you some cool
That's
stuff, and
real
I'll
cool,
also show you
actually.
the one thing that I wish TradingView would have, but they don't. But we'll get into that later.
Okay, yeah, because that's
It's
interesting.
implied volatility of individual stocks.
Mm.
Put that on the list, please. It may
Yes,
cost
yes.
money, but I'll pay for it. So anyway,
And I will say before we move back onto your watch list is the component of 3 weeks before earnings. We'll have to dive into that. But if anyone's watching or if they do watch this show, just gives them another reason to bookmark it a month out or so. So we'll save it. We'll save it. Tell us more about your watch list.
I promise you, if you let me show another platform, show implied volatility, once you see it, you'll never trade earnings differently again.
Interesting.
That's the teaser. So
Perfect.
all right.
When we make the trailer, there'll be the theatric music with the drums, and it'll just be that scene. And then it'll go to a dark screen, and it'll just say, come in, January 2023.
You'll never trade earnings the same again.
Exactly. Okay, watch list. Let's hear it.
All right. I want to know the VIX because, see, this is making me sad. Like I said, 20. We're getting down below 20. That makes me sad. TLT is bonds because bonds. And then my favorite cryptocurrency is Monero up here.
Interesting.
It is actually above Bitcoin and Ethereum. And the reason it is because if I look at the Monero versus Bitcoin chart, it's one of the best performing cryptocurrencies this year. Nobody's noticing this.
Give us a quick.
But I've been posting about it.
Give us a quick background on Monero because that's interesting. I don't see many posts about either.
It's a privacy
and,
coin.
Yeah, and disclaimer, everyone, just so you know, none of these are recommendations of any sort.
I don't.
We're just brainstorming, chatting. Yeah. Also,
I don't
there's some
recommend it.
questions in the chat.
I'm just making an observation.
Yeah, just observation. I don't even know what's Monero known for. I'm not even sure.
Monero was developed back in 2014, so it's not new. It is a privacy by default cryptocurrency, and it is basically if you go on the darker parts of the web and you want to buy things, there are two things that they accept: Bitcoin and Monero.
Got it.
Nothing else. And it has really, really maintained its store value through this bear market better than Bitcoin. It's up about 100% versus Bitcoin.
Super
but
interesting.
Again,
Yeah.
hashtag disclaimer, not recommending. It's just it's amazing to me that you have a whole religion around Bitcoin and you got a whole ecosystem around Ethereum, but nobody really talks about Monero. But I see it as a very key use case in the cryptocurrency space that it's clear to me. Privacy, that's what cryptocurrency in my opinion should be. But yeah, that's my little tag on that. But yeah, of course I'm doing Bitcoin, Ethereum, and I'm looking at the crosses of them, like Ethereum, Bitcoin, and of course Monero Bitcoin. And then I look at Litecoin, Solana, and Cake and Atom, just because I have friends that are really big on them. And I used to have Flow up here. The big thing here, just a quick aside on Solana, I had a friend of mine that I don't do this for individual people. I don't give trading advice, but he was just so completely unable to make rational thoughts that like he bought a bunch of Solana at 100 earlier this year. And when I got up to here, I was like, dude, like, I think you should take some profit. He didn't. So when it came back to break even, I was like, and I saved him a bunch of money. So that's why I watch these, is because I got friends that are trading it and I care about them, and hopefully they listen to me. So gold, of course, because gold, silver, oil is of course a cool thing that's been going this year, but that's pretty much done for the year. And these are some of the stocks that I have, like long term.
Is that waste management that you have?
Waste management,
That's
yeah.
Oh my gosh! So really quick before we get into that, I want to say these personally, disclaimer once again, we're just observations, brainstorms, but these personally are sometimes my favorite types of companies to talk about because it's waste management, WM. It's not talked about like Apple or Netflix or Google or Amazon, but it's the largest, company responsible for trash, waste, other, garbage aspects around the country. It's a super needed service, and it's not flashy. It's not talked about, but look at that performance. So I love those stories. They're just sort of not as exciting to talk about, but they make so much sense when you actually start to break it down. Of course, the largest
Yep.
trash company that's growing and expanding through the country, acquiring more markets to operate in. Of course, that's a staple. That's a much needed service. So it's not surprising, but I've always wondered why people don't latch on to it. So curious
It's
to
not
hear your
sexy.
thoughts. How'd you find it in the first place?
I found it. I've been trading waste management since I started a decade ago. In fact, before then, like when I first started getting interested in stocks and stuff, and probably to that, what happened was I was working in IT. That was my past life, and I started getting interested in finance when I'm sitting there working on networks and doing my IT stuff, and my company in 2008 started doing hiring freezes and uh, salaries freezes, and I was like, what's going on here? I'm still working hard. We still have clients. I was amazed that finance had just grabbed the whole world by the cojones and was influencing things. I was like, you know what? Maybe I'm in the wrong business. And so I started getting interested in it. And there's a few opportunities I started buying here and trading waste management. And I remember having a conversation at a party one time with somebody, and I started saying, well, yeah, I'm using technical analysis. Like, I don't really care what, I care what a company does, but most of the time I'm looking for, signals and patterns. And they asked me, like, so if the price of crap was going up, would you buy crap? And I was like, yes. As a matter of fact, I'm very heavily invested in garbage. And I've been in this company for well over a decade. And yeah, it's great. It's great. And it's not sexy. But it had the same 2020 COVID low, and it is up from the COVID low almost 100%. Of course, that's not YOLO, Tesla gains, which is why it's not sexy, but this thing pays a dividend. And I mean, this is what I concern myself with at this point. Day trading is a bonus for me, but having good dividend paying stocks is how I keep the lights on. That's the way I look at it.
Yeah, consistent income, especially if it's a compounder and it's got earnings potential, great management, steering the ship in the right direction. You just kick your feet up and enjoy the ride. Keep going down your watch list, and then
Yeah.
I'll read off a few
So-
questions in the comments, and we'll wrap it up as we kind of
Yep,
hit our
that's-
hour plus marker.
And that's the close. Ding, ding, ding. And so Costco is another one that I've been trading since 2020. This was basically a thesis. Again, we're getting into kind of like my actual investment theses. And Costco is one from 2021 where I basically was hearing the narrative about inflation. And so I started thinking to myself, what companies are going to benefit from inflation? And I told you when I came on, I had to go, check my smoker. I was spending hundreds of dollars at Costco, like a month, buying like briskets and pork butts and stuff like that. And it was packed. What are people going to do if they're worried about inflation? They're going to buy in bulk. And it was just that brainchild. I was like, okay, I need to buy Costco. And so that's the Costco. ExxonMobil, you can go back through my trade. And so we're kind of coming to the end. Go back and find my post about ExxonMobil back in January of 2021. Like, this is one of those kind of where I gaslighted myself, no pun intended, where I thought I was crazy because ExxonMobil was trading below book value. That means if they sold all of their assets, their stock price should be about $55, and it was trading at 47, and oil had just gone to zero, below zero. And I was thinking to myself, like, why is this not more obvious? And so naturally, I wish I would have bought more, but that's ExxonMobil. And Apple,
By
I
the
don't
way,
actually.
just really quick,
Okay.
Wes, before we go to Apple, so you do have some fundamental. You are a technical trader, but you are also a fundamental investor. You've already mentioned dividends, some of the growth
Yes.
aspects, and now book value. So that's
Yes,
yeah.
yes, technical. Tell you this, I don't remember exactly how. Well, I think really oil was just kind of a big deal in the beginning of January 2021. That was my thought process then. Was this was January 2021? If you recall, that was meme stock madness. Okay, I didn't want to touch any of that. I did not care. Could not make me care about GameStop. Sorry to all the Wall Street bets people. But I was looking, after we had this huge COVID run, what do you buy? It was very, very difficult to find something to buy.
And the one asset class, the one thing that was getting absolutely hammered in, January 2021, or was still depressed, was oil. Okay. And I knew intuitively that oil was not free. So it just, that all kind of coalesced into doing a little bit of research on ExxonMobil. And I was, maybe I read an article, I don't remember, but it came to my awareness that this stock, I'm not a value investor at all. It just, this came to my awareness somehow, some way. I don't remember the exact genesis of it, but I was looking for something to buy in early 2021 because I didn't want to buy meme stocks. And I found ExxonMobil. It made sense. And so, yeah, there's trading, which is, day trading. Oftentimes I will look to trade stocks based on technical patterns, but investing, it's got to have some kind of a long-term thesis. And that's kind of the brainchild of how this came about. So, yeah.
That's also it's interesting too as well when people are combining technical analysis with fundamental analysis. I always consider that to be such like a superpower because it's almost like, like a battle at times. Fundamental investors think this way, technical traders think that way, and they never really get along. Two totally different schools of thoughts. But there's something to be said of, wait a second, what if actually you're able to do both and maybe use fundamentals to find these great setups, as you're kind of demonstrating some of these examples, and then you're using technicals to sort of guide you on the sort of adventure or the trade or how you want to enter or exit in certain instances. I'm a huge proponent of that. It still feels kind of early. It doesn't seem like many people are doing it, but it does feel like it's a trend that's picking up a little. Walk me through this idea, and then I have some questions I do want to read to you.
Yeah, I just went back and searched for it. This is one of those things that whenever I'm starting to, actually this was January of 2021. This is one of the things that I go back to personally, and this is why it's really good to keep a log and put your ideas on TradingView, is because I can go back and have accountability for myself, and also really go back to my process. Like one of the things here, I even named this, close your eyes and buy, because like I said, I was gaslighting myself. Like, am I crazy? Is it not this obvious that this is going to be a good buy? Because I didn't know. I was just like, oh, well, it's already going up. I felt like I was late. Like right here, I felt like I was late buying the stock because it had already come up off the double bottom. So I was like,
I can see that.
It's going to stop here. It's like, but basically, I was looking at what's the stock as the most hated, specifically dirty energy, because everybody then was talking about EV stocks. You remember NEO, Plug, all that stuff had gone. I'm not going to touch those things with a 10-foot pole because they're going to go. Look, nothing is new in finance. When you see something going on a hockey stick, stay away. Just find something else. And so this was find something else. And it was trading below book value. Talked about oil, and also it had a 7% dividend yield. Wow. I know inflation was going to kill everybody's, money, but 7% is still really big. Okay. So you had all this going for the stock, and it's why? So that's a good example there of, using a little bit of contrarian thinking. So I'm trying to be very contrarian in my investing, basically.
Great quote on nothing is new in finance. However, that's like that almost governs trading activity, is everyone thinking something is new and then rushing into it. So it's I love that was a nice quote. We're gonna have to write that down at the end of this. So I'm gonna read you a few questions and we'll wrap up.
I haven't been reading chat, but go ahead.
Yeah. Oh, there's one more thing I want to say about this Exxon trade and oil being the most hated. I think at that time too, in the S&P 500, so largest index in the planet, energy was the lowest weighted sector to it, like 6% of the whole index. So that whole trade was so hated. Exactly. It was wound up almost like, it wasn't even wound up tight. It was just out of downward movement in a way. The market hated it. The media hated it. The indexes hated it. You just couldn't send that sector any lower unless people stopped using oil literally the next day.
Well, everyone's opinion was that we were going to do away with fossil fuels. Like the Biden administration got elected, and that was one of their big platforms. And people were saying on CNBC and elsewhere that just don't put your money into dirty energy. It's going the way of the dinosaur, pun intended. That was the That was the narrative. And that's why I said, going back to what I said, you got to ignore narratives. You have to come up with your own. And that's why, like, I'm even getting influenced by the narrative, by questioning myself in the title of this post, because I'm like, am I crazy? Everyone else thinks this. But that's why trading and investing is so hard, because we all, even after all this time, I still find myself like, everyone is still me. I'm still part of everyone. And so when everyone's thinking this way, I'm not removed from that.
So hard, but also that's also the fun of it. That level of creativity and deep thinking, I think, is probably really the joy of it, actually, that as well. Okay, some questions. First of all, I have to say there's someone in the chat named Powder Donut, and he wrote something that I thought that was very funny. He is in school suspension right now in Texas, and he just wanted to send his love. So Powder Donut, I think we have to say, we exactly love right back to you, but try to avoid those detentions, and at least if we're making your detention your school suspension any easier, hopefully this is sort of inspiring you in some way. So I had to shout that out because I wasn't expecting that kind of
I wish that
comment.
I'd been interested in finance back in when I was in high school. I was kind of, because I grew up in high school during the .com boom, so I got to kind of see everyone's craziness, but I didn't get hurt by it. Little interesting anecdote. Maybe it was kind of prescient to what would happen in the future. So we had this assignment in one of my classes. It was where we were going to make a portfolio, because trading stocks in the late 90s was like all the rage. Okay, I was in high school, and the assignment was, if your portfolio, we pair off in teams, and if your portfolio outperformed by the end of the year, you didn't have to do a book report. And I don't particularly like reading books, so this was my incentive to win. And so what I did was, everyone else bought Coca-Cola, they bought, like these boring stocks. I bought, some of those, but then I bought this one stock, KTEL, KTEL. Definitely doesn't exist anymore. This thing, we call it now, the kids call it YOLO'd, basically. It went up 8-10x, and basically I blew everyone else out of the water and didn't have to do the book report. Total luck. Do you
remember what KTEL did, or was it just like, that's a cool name?
It was a tech company. It was a tech company. It was just a tech company. I don't even remember what they did. It was KTEL, like some telephone stuff. But I guess that also kind of told me way back in my high school days that all you need is one big winner. That's really all you need.
That is a lesson that, it's like the venture capital model in a way. You make,
it really is.
You make 100 bets, but if you have that one really big bet, or maybe you make 10 bets and you have one great one, that's all you need to not only break even, but to actually make a sizable profit. That math is also sometimes tricky for traders to understand, but if you're listening to this and don't know it, you should just try to read into a little bit. A few more things. AB says love from India. So we got someone from India who chimed into the stream. Juzuele Juan Raguzman says, excellent conversation, guys. Regards from Mexico. So we got a high school suspension / detention. We got someone from India, and we got someone from Mexico all on the chat saying hello. There are a few messages that we shouldn't read out. FRRKA, Frack, I'm not sure. He says to you, Norok, are you looking for more longs right now or more shorts?
As I said, stocks are cheaper now than they were a year ago.
So you're interested now on the long side, maybe a little bit of a recovery?
This honestly, since you put me on the spot, like I said about the, I don't want to delete my lines. I will in this profile. As I said about the S&P 500 on that daily chart from the CPI print. Where's my thing? There we go. From the CPI print on October, you need to assume that this thing is bullish. That being said, this move has gone on quite a while. So would I be adding on to longs now? No. But at any given time, I think it's always best to assume that stonks go up. So I would be maybe looking for, a little bit of something to trick some people out. Maybe you get it, maybe you don't. Maybe it just, fakes her. I don't know. I don't know the future, man. I just know, like I said, stocks are cheaper than they were a year ago. And right now, you're getting a rally. But this rally has been going on for a long time, so be careful.
Next
That's
question is from Let's Learn, and it's kind of related to our volatility conversation earlier. He's wondering, how much does volatility impact where you set your stop loss, or are you just sort of you're still sticking to your rules despite volatility increases or decreases?
That's a great question, and I do have an answer for that. So this indicator that I made in TradingView that tells me when these spikes happen, you'll notice that I already have kind of a little cross set up right here. This cross is I think it's like 33% of average true range. Okay, so let's see what that looks like. So what we can do here is bring up average true range. What average true range is it is a measure of volatility. It basically tells you like the height of each bar averaged over how many you set it to. So this is 14, let's do 20. So, basically as, bars get smaller, or excuse me, bigger and bigger, you tend to get a rise in, ATR, the width of each bar. And that's going to give you a good idea for how far can this move go? How far can this bar go? And that's the best tool out there, is really ATR. And so I'm going to use ATR in determining my stops. And then as I showed you guys with my trade from Tuesday, which, let me find it again. The other setup that I use, where is this Tuesday? No, it's over here. When we had this dip right here, one of the things that I'm going to do is I'm going to look at the move that got us here, which is going to be this trend. And there I know, obviously this is creating volatility. And so when we get this halfway point, that's my target. So I now have this price range to base things on, which is volatility. And so when I go to set up the trade, I'm going to say, there's my target. Okay. I want a 3-to-1. So regardless of volatility, I'm going to set it based on my reward risk. And so that's going to let me come in here and calculate roughly where my stop needs to be. And so, I either do it with ATR based on, spikes, or if I'm trying to trade like a reversal like this, I know that I'm going to be looking for a target, and then that's going to base my stop. Let me stay on that point for just one more case and look at it when you don't want to do that. So when the reason that keeps me safe is because, let's say that this would have worked, but let's just forget that. So if I were to say we had this move right here from here to here, and I want to try to take this reversal, like this reversal here, if my target is here, okay, and my stop needs to clear it, I'm not able to get a 3-to-1 and clear that high. So I'm not going to take that. That's the trade I don't take. This worked, but this is an example of how I would use, what I'm trading, which is a reversal of a trend. If I can't get enough profit out of that pullback, I'm just not going to take it. And so, you have less volatility in this move, okay, than you do in this move. And this is the opportunity I want to take, not this one, because there's just not enough volatility to play. So yes, volatility will influence my stops either through ATR or just where my risk reward is. Hope that
it
wasn't
does.
too much.
And the best part about that is you coded your own indicator to match that strategy and mindset. Truly, that should be goals for a lot of people going forward. And I think that's sort of like might be the next wave actually of investors and some traders, which is, you do have all these traditional things that are taught to you, right? Textbook stuff, MBAs, technical schools, but the next wave might be actually you have a strategy in mind or a concept in mind, and rather than even following some of those top methods, you're actually making it yourself. So I think that's it answers the question completely. And to me, the best part is you have your own system to accomplish just that.
Mhm.
So someone from Finland's in here as well too. I suppose in rec. But the question is actually from my good friend. Never met them, but we chat on TradingView a lot. He's a macroeconomist type thinker, loves the big picture. He has two questions for you. Do you think the dollar has peaked? Number one. And number two, is the VIX at 19? You can't buy the VIX, obviously, but do you think the VIX is a buy in the sense that more volatility is on the horizon? Or, is it going to be a little more subdued? But let's answer the dollar question first. Very curious to hear what you think of that DXY chart.
So I've been talking about dollars on my streams. The dollar index as a whole, DXY, and I said this a while back, but I didn't really post it, so you just have to take my word for it. But no, I'll share this. So if you go back to, let me put my thoughts together. How I want to explain this. Okay, so like I said, I cut my teeth on Forex years ago. Before crypto, that was what you traded if you wanted, 24-hour kind of degen trading style. And one of the fundamental precepts of Forex trading was that interest rates drive foreign exchange. Interest rates drive currency valuations. Let's just take that to the bank. Now, 10, 15 years ago, you had a real difference in interest rates. The New Zealand dollar would be at like 6%, the dollar would be at like 2%. And so within those changes in spread, you would get trends. And so Forex, you didn't have cryptocurrency to trade. You didn't have the micro futures to trade. So Forex was where you could find a lot of good, WYSIWYG. What you see is what you get, technical patterns. There was movement, there was volatility. But as everyone put their interest rates down to zero, Forex, you don't hear about it now because it hasn't had any trends. That's changing, by the way. That's changing. People need to pay attention to that. If you don't have a Forex account, you may want to get one. And so this rise in price, and I'm not saying that I knew this from my knowledge in the past. Sometimes you forget things. This is totally understandable because interest rates on the dollar have been going up.
Right. So if you own dollars, you're entitled to those higher rates. Or if you're
Right.
getting dollars to buy treasuries, sorry.
It's harder to get dollars. There's demand for dollars, and they're trying to suppress the demand for dollars. And when demand for something goes up, when it's harder to borrow, the price goes up. It's just kind of how interest rates work. Whereas other countries are not, including the Bank of Japan, especially. They're still trying to, depress theirs even more with some more quantitative easing this year. And so right around the time here in October, what you started having was you had that inflation print that was showing a slight decrease, which implies that they're going to, and actually had Jay Powell's comments today, or yesterday, about being more dovish. In other words, they're going to kind of slow down the rate hikes. So what are you getting? You're getting the market reaction here, the forward expectation that the interest rates are not going to go up as much, and so the dollar is going to start to retrace. Yes, the dollar is probably going to retrace because, this is a little bit of a. Anytime you see this, I talk about like hockey sticks. You don't want to be buying it, at the top. I mean, you didn't want to be buying the dollar up here, but now that there's talk, there's speculation, the market is pricing in the not the lowering, but the less increasing of interest rates. And what you could see here, I've got it already in a box here. I was trying to explain to some people, is whatever you want to call this. It's not a double top. It's not a head and shoulders. I don't know what it is. It's a stall. Okay, and so when you started getting this stall out right here, you knew something was changing. And this is not something that I would trade, but again, Forex. You had on that October 21st, you had some news out of Japan where you had this, again, big spike up, pull back into a range. And so this is the actual trading vehicle that I've been looking at for the dollar, which is the dollar yen, because that's where a lot more manipulation has been going on with the Bank of Japan and things like that. And so I'm talking my book right here, but I'm looking for, again, that full 50% retracement of this move back to 127 or something on dollar yen. and it's all coming off of, this spike up and then come down. Meanwhile, the dollar, which is made up of dollar, yen, and euro dollar, mostly euro dollar, I believe it's like 70%. But yeah, you had that parity, that one on euro dollar, and it got below here, faked a bunch of people out, but it's going back up. I mean, you had this fake out right down here, but you can just see it on the charts. The dollar's doing a pullback. It's doing a pullback to a bullish trend right now. And so if I'm going to, be analytical, I've already got it drawn right here, then I'm going to say dollar's probably going to come back to 102. And so that's what I'd be looking for. DXY, rather. So hashtag disclaimer.
Yep. I love the euro chart too, the fake out. I thought that fake out was fascinating as well. One thing that I thought was really interesting is, there's no Zillow in Europe, but when it went under $1, I was just looking at European property in major European cities, because as you know, the U.S. housing market was just also on fire at the time. It slowed down a little, but as when the Euro USD was falling, the U.S. housing market was still very hot, cooled down since. But I was watching the European housing market as we were nearing that parity and then sort of breaking below. And I was thinking, what an amazing time if you ever wanted to own like a home in London or Paris or one of those major cities.
But whoa, bro, real estate's going to crash.
Exactly, yeah. That's what well, do you actually think that, or are you mocking all the headlines that we're hearing?
I'm mocking. Again, it goes back to what I said about narratives. Like, real estate's going to crash, bro. Don't you know that it did in 2008? Don't generals fight the last war?
It's almost like the more people who are talking about it, the less I believe it. It's that I'm always more worried when no one's talking about it. That's like the time to be concerned, I feel like. Actually, there's a great quote about that too. How before the .com bubble, everyone was saying like this market is unstoppable. It's so great. Everything's going up. Our tech is changing the world, and it's just so interesting how fast those scales will tilt. But Wes, we gotta wrap up now. We're more than an hour into the show. Hopefully this is a nice blueprint for the first TradingView show. Your presence was awesome. We covered
I had a lot of fun.
Much. Yeah, we covered the hours to trade. We took questions from various traders and investors. We went through your watch list. We talked about macro and inflation. Excellent chat. And we're going to have to do it again, too, because earnings season, I think, is going to be a show that people won't want to miss. So we have to book that ahead of time. If anyone has any questions, they can just ask in the chat, or they can go ahead and follow your TradingView profile. I put a link in there earlier. I'll drop another link in after we wrap up. But thank you, Wes, and you and I will be in touch. It's funny, we've chatted on TradingView multiple times, but this is our first time actually like talking on a phone call or on a video call. So that was pretty cool for me too. And we'll be in touch.
Yeah, these are a lot of good questions too. I might actually answer people individually. I'm looking
Absolutely,
at
do it. Absolutely. Yeah, we'll probably have. Right. Let's see. How many people are watching right now? We got 16 people watching at the moment. Not bad. And 321 views. And that'll probably, gingerly rise throughout the day as people open up the tab or get the notification. So, I'd keep your eyes on the chat. And I'll drop another link to your TradingView profile so people can follow you. Okay, Wes. I'll see you.
All right.
See you.